Olá, pessoal. Tudo bem? And welcome to the Brazil Crypto Report podcast, where we talk to the builders, entrepreneurs, and influencers from across the Brazil crypto ecosystem. I'm your host, Aaron Stanley, and today I'm joined by Bruno Ramos de Sousa, who's the head of new markets at Hashdex. Hashdex is among the largest crypto asset management firms in the world, with around 400 million in AUM, and it's one of the crown jewels, so to speak, of the Brazil crypto world. So today we're going to be learning more about Bruno, Brazil's crypto ETF ecosystem, and Hashdex's global ambitions as crypto adoption picks up worldwide. Also, just quick housekeeping note, in light of some of the ongoing disputes between social media platforms, I would like to ask listeners just to make sure you are subscribing to Brazil Crypto Report on Substack if you don't already, just to ensure that you are receiving everything in the future. With that, I'd like to welcome Bruno to the show. E aí, Bruno, tudo bem?
Tudo bom? A pleasure to be here. Thanks for the invite. As we were talking before, I've been a follower of the newsletter since the beginning, so it's great to finally chat a little bit.
Absolutely. So why don't you tell us a bit about yourself and how you got into crypto?
Yeah. We should always start there. So I'm originally a lawyer, capital markets M&A lawyer. Worked in large firms in Brazil and the U.S. Since 2000. And then, doing normal corporate work, but also a lot of banking work. So I had a little leg there on the banking regulation side. And of course, a couple of friends in Bitcoin in the early days back in 2009, 10, and hearing these folks saying that, Bitcoin is going to explode the whole system and things like that. So we had our disagreements there. I'd say they were right on the part that mattered, which was like, prices will go up. So I had my lessons of humility there, dealing with people that sometimes you think you're not from traditional markets, but that were seeing things.
Yeah, we all had one of those friends. We all had one of those
Yeah,
friends, right?
yeah,
Where
yeah.
like, who's this crazy guy promoting this internet money thing?
I had a friend. He's a real OG of Brazilian Bitcoin investing, Artur Costi. So he's really a narco degen, real crypto type. And he went all in 2009, 10, and all in mean dropping his life and working for this. So it's cool following that. But I think things clicked for me in 2015 when I was working at Davis Polk. Davis Polk is one of the largest law firms in the world, probably the best capital markets firm in the world for sure, out of New York. And one thing we were working on was actually the Winklevoss Bitcoin ETF filing. So when that appeared, I said, okay, so this is real. I mean, this is if we're going to have an ETF in the US, then this means Bitcoin's here to stay. Fast forward 8 years, and it's spot ETFs are not there yet, but it's when it appeared to me that this was worth paying more attention to on a professional side maybe. And then I came back to Brazil in 2016 and started building a fintech practice in the law firm in Verano at the time, and just started having a lot of crypto clients. Crypto clients started coming up, fintech clients in general. Very few people were working with fintech in Brazil at the time as lawyers, the main ones being the guys at Pinheiro Neto, Bruno Balducini, Fernando Donero, which are good friends of mine. And so I started developing that practice, and a lot of crypto stuff started coming. And that included everything from ICOs to exchanges to different types of clients from all over, until eventually in the end of 17, I met Marcelo Sampaio. Marcelo was a CEO, one of the co-founders of Hashdex, and Hashdex was just an idea. So it was being formed in his head, and Bruno Caratori is the other co-founder. And I started developing with them the concept of what Hashdex would be, what the funds would look like, first in an external capacity. And after a couple of months, I said, okay, let's do this for real. And the funny thing is that Marcelo's brother-in-law was actually Ricardo Verano, who was the managing partner of Verano Jogado. So he's my boss indirectly. And Marcelo said, well, but you're leaving Ricky. I said, that's good. Ricky's a good friend. So and he understood he's actually an investor of ours, and it's been a cool ride. So it's been since early 2018. So when I joined the firm, it was actually just just really the three of us there plus a couple of people, and literally like there was no even the entity was just being formed. So I'm here from day one, we can call it like that, and then we started bringing in the new partners, and then then the ride started, and we always had the idea. If you look at our seed deck, so this is we raised venture capital money back in that early 2018, and you look at the deck, it was crypto ETFs Brazil. That's what it said. It's like essentially crypto's here to stay. This is a major asset class. This investment in crypto will be done a lot through ETFs. ETFs is the largest type of investment product that rolls in the world, and Brazil's massive, and we have an angle in Brazil. So we started with that, of course, always with an idea of the US too. And actually the first funds that we built were this is actually the fund that was converted into the ETF in Cayman and Bermuda. This was a US fund. It's a Cayman fund, but with a US offer. So it was already aimed at the US market with the idea of converting that fund into a proper ETF in the US when the time came. So we worked again with Davis Polk on building that. Davis Polk was working for a lot of the firms at the time, including I think Grayscale, Genesis, a lot of things were going through their desk. So we had some good experience on their side. And then eventually in 2019, we realized that things in the US weren't going to pick up because of regulation. And then in discussions, through Davis Polk with the SEC, with Jay Clayton at the time, it became very clear that, an ETF, a crypto ETF wasn't coming anytime soon. That was very good for us because it allowed us to really focus on Brazil, which we had some good assets, a big part of it being that all of the founding team was Brazilian. And then we had relationships in the market. And then of course, we started building the local funds and getting distribution to them, which is a key thing in the fund industry. It's like, it's not to fill the dreams. It doesn't mean that if you build it, people will come. You actually need the channels to sell these. And then, so that was the journey that in 2019, and always working with the ETF, always around the idea of the ETF, until we finally got to Hashdex. But I'll pause there because otherwise I'll keep talking until we get to 2023. Yeah.
No, thank you for that background. That's really great context there. And it's funny, even just as you were talking, I was thinking, like, I feel like I have a lot of similarities with you in terms of kind of entering into crypto. Because I actually, my first ever, the first article I ever did about crypto is in 2013 as just kind of like a hey, what is this type of thing? Stopped paying attention to it for a couple of years after that. And then 2016, I actually did like a big profile piece for the Financial Times for one of their like weekend magazines on the Winklevoss twins, Bitcoin, and their Bitcoin ambitions, right? Yeah. So I got asked to do this story, and I was like, all right, sure, why not? So I ended up, spending some time with probably about like 90 minutes on the phone with the Winklevoss, or it was actually one of the Winklevoss twins. At that time, they came like they were inseparable, right? Like it was, but I got one of them. I think Cameron was sick, so I got Tyler. Yeah. So, but he spent a lot of time with me on the phone, and he was. I came into this with a lot of skepticisms about like, I'm not really sure about this thing. I'm not really sure about the Winklevoss twins. They have mixed reputation, right? Yeah. But I came out of that conversation like, wow, there's something here I should be paying attention to. Yeah. And then the reception to the article when it finally came out was like unlike anything I'd ever seen. Like it was. We realized quickly that the Winklevoss twins were controversial characters in the crypto world because I started getting all these messages from people like, why would you write about these guys? But anyway, I do credit sort of the Winklevoss twins for kind of sending me down the rabbit hole, so to speak, of Bitcoin. And then kind of I covered a bit of some of their early I think I covered their first Bitcoin ETF rejection in like March 2017 or something. And then obviously things haven't really changed much since then, I suppose. But anyway, so a lot of I hold them in high respect as far as kind of red pilling and this whole subject matter here. So maybe let's kind of let's dive in a bit more into like I'd like to just kind of tap into like the difference between like in the US when we talk about Bitcoin ETFs, it's really it's been the same conversation for like 10 years. Like, all these
Yeah,
people will, submit applications for a spot ETF. The SEC will deny them, saying that there's too much, manipulation in the spot price of the asset, and there's not enough kind of surveillance tools, and that they kind of give the same boilerplate, answer basically to everybody's applications. Meanwhile, there's other countries like Canada that a couple of years ago launched their own, or there's a couple Bitcoin spot ETFs that launched
yeah,
there. You have other
yeah,
places in Europe that have launched, and then you have Brazil, where you look at Brazil and you have there's obviously the ETFs that you guys have, and there's several other companies, and there's at least like 10 or 11 of these digital asset ETFs trading on the B3 exchange right now,
yeah,
which is
yeah, yeah,
Brazil's main exchange. And not only these are not just like fringe products, like these are among the top, I think, of the top 10 most popular ETFs on the
yeah.
exchange, like the top like five
Uh,
of them are crypto.
yeah,
So like what is going
hash,
on in
yeah,
like
yeah. So
so
I mean, sorry, go ahead.
oh, so just like what's going on in Brazil that makes these products like so viable and popular compared to like what we're seeing in the US and elsewhere?
Yeah, so going back there to, we had the funds, we had distribution with the fund with the banks, and we were looking for ways to build ETF, right? Uh, the ETFs, they didn't really fit the rule, which is Rule 359 from the CVM. One major difference between Brazil and the US is that you have, in the difference between common law and civil law, you have a very clear rule around ETF issuance in Brazil, which is different from how things work in the US. So you have a very clear rule from 2002. And then, we looked at it, it couldn't really fit uh, crypto into the rule, right? But then we started looking at, listing the fund that we had in Cayman and other places, and then the conversation started with Bermuda Stock Exchange. And having a listing, even if it's an exchange that has a smaller volume, is very important because it puts you in a different bucket in terms of allocation from investors. And if it's publicly traded, they can probably invest in that. If it's a more hedge fund type vehicle, they might not. So we said, okay, this can be interesting. And then connecting the dots, I looked at it, and this was my project internally. So we had a lot of discussions around this. I said, if we can, and I knew at the time there was a precedent that had been opened by BlackRock, which was BlackRock when they launched IVV Brazil IVVB. They created a feeder fund structure, which is an ETF of an ETF. So IVV Brazil essentially buys IVV in the US. And this was a precedent from 2013, I think, with several long discussions from the board of the CVM around that. So there was a good precedent there, and not by chance, actually, but by luck too. But these things that the universe ends up helping. We were working with Pinheiro Neto at this, and it was Pinheiro Neto who had done the structure for BlackRock too, with Caio, who for me is like the best ETF lawyer in Brazil. So Caio's also became a good friend because we had several years there in the trenches trying to put this product out there. So talk to Caio, talk to Fernando there, Donero. I said, okay, can we do an ETF in Brazil that buys an ETF abroad? I think this fits the rule. And let's say, yeah, we all think this fits the rule. Let's talk to the B3 if B3 would be willing. And then B3 say, yeah, if you fit the rule, this might happen. And then we went to the CVM. And then we started a long journey with the CVM. This took two and a half years maybe of back and forth going and saying, this is the structure I want to build. I'm following your precedent. I'm doing this everything right. And the first discussion is there with Daniel Maeda, who's in charge of fund supervision, let's call it there in the CVM. He asked about, well, why not Bitcoin? And I said, well, because we believe crypto investing should be done through indices. There's a lot of discussion around Bitcoin because that's how it came from the US. But as in any other asset classes and for ETFs in general, basket products and index products are more interesting. If the market trends towards a single asset, the index will reflect that. If you look at Hash 11 today, you can see it's very concentrated on Bitcoin and ETH because that's where the market is. And if the market becomes just Bitcoin, it will be 100% Bitcoin. And if the market, disperses itself, and we've seen this movement a few times, concentration in Bitcoin, concentration or dilution in other assets, right? So the concept was very, well received. And of course, then we started going into meetings and meetings and meetings with B3, with the risk committees, until finally, so end of 2021, we have the product in Bermuda trading. One thing that we needed to do was actually transfer the index and create a new index. Initially, we had created the index internally. It was the Hashdex Digital Assets Index. We passed a lot of that IP to NASDAQ and co-created with them the NASDAQ Crypto Index. And in that process, that process took like a year and a half, because for Brazilian ETFs, you can't self-index, so you can't be managing your own index, right? So started trading there, was approved in Bermuda late 2021, started trading early 2022. Very important, first crypto ETF in the world. Sometimes people say Canada. Canada started trading after our ETF, and we're very proud of it because I was obsessed with this thing. I woke up every morning for 2 years saying, we're going to have the first crypto ETF in the world. We're going to have it. And then we launched Bermuda, and a couple of months later, we launched Hash 11. It was chaos to launch. B3 had several operational issues because we chose to do something different, which is an IPO of the ETF, with the big banks leading, with Genial, BTG, Itaú leading the syndicate, and then all other major banks essentially distributing the product. And then finally, this was launched in April 2021, so it's completing 2 years now. So I said, actually, the one that was early 2021, 2 years from Hash 11 now. So why did I take this whole route to say, the truth is, and without being, I think, really putting credit to where the industry's, to where it's due in terms of the industry development, the market is as it is today in Brazil, mainly because of Hashdex. And right after that, of course, you had KR launching their Bitcoin ETF. We launched our Bitcoin ETF. Then we launched our Ether ETF. They launched the Ether ETF, and then you saw the other issuers come in. But the truth is that the long process that we undertook with the CVM is what opened the doors for the other ETFs to come. And it's good that we were actually the first to launch, and that's what led to Hash 11 having the volume and the size that it has, and a little bit of that winner takes most scheme took over, because any other issuer launching an ETF, a crypto ETF in Brazil today, will struggle against just the size that Hash 11. And Hash 11 is the second largest ETF in Brazil in number of investors, and it's on path to become the first. And in terms of volume, it's almost every day top 5. In big crypto days, it's like top 3, top 2. This is something that doesn't happen anywhere else in the world. So it's a incredible phenomenon, and we like to reinforce it because people don't pay enough attention. And I'm speaking not from like underdog mentality, Brazilian complexity vira-lata. It's just Brazil has the most developed crypto fund ecosystem in the world. There's not a country that comes close to it. Canada has spot ETFs for Bitcoin and ETH. That's it. We have, and then we, I mean, Hashdex and the other issuers. So we have 6 ETFs in Brazil, 4 of them basket strategies, several other issuers with basket strategies too, with a clear index approach from the CVM. So you come to Europe, for instance, they're ETPs, they're debt products, they're not equity products. That makes a difference. They're not real ETFs, although they work very similarly. So the underlying assets, they tend to be approved on a case-by-case basis from BaFin in Germany, from SIX in Switzerland. So the index approach that the CVM has, which comes from the normal ETF rule, That's very advanced, and it was applied to crypto as it would be applied to equities. So, if is the index solid? Does it work? I'm not here. CVM's role is I'm not here to say if Algorand's okay and Cardano is not. Like, if the index rules are sound, the index is approved, the product can be traded. And the CVM is the best regulator for crypto funds in the world. It's there's and it's largely due to Daniel Maeda and his team, and actually the commissioners there. So it's a real cool story in that sense that we are leaders in the world in that sense. Of course, given the size of the Brazilian market, it's some of these ETFs are smaller if you compare it to just like the largest Bitcoin ETF in Canada, but Hash11 is still the third largest crypto ETF in the world. So it's coming from Brazil, and Brazil's a 40th of the size of the U.S. market, for instance, right? So what do we have? I think that it's different in the end when you look at all this. A big part of our thesis has been that crypto investments will be done in the long run, mainly through regulated products and vehicles, just because it's the way things work for other asset classes. If you're a pension fund, you can't really buy crypto directly. This is the case for most, but not even that. If you go to a hedge fund, a normal hedge fund or family office, they have a hard time buying crypto directly and dealing with everything. And you don't have to talk about crypto. If you look at gold and see what happened with gold prices and volumes in gold after GLD, which was the first gold ETF to come out, the market just tripled in size. And this is because gold's an interesting comparison there, because you have physical, you have synthetic, you have custody issues around gold ETFs. Some things are very similar to crypto, and most of gold investment is done not through buying gold bars. It's done through buying ETFs, right? If you go to multi-asset products and index products, even more, like the work of managing just crypto infrastructure. This is not for amateurs. Now we saw what happened last year, and a silver lining for us, of course, it's always bad, Bitcoin dropping and the market melting as it was. We at Hashdex had absolutely zero issues, and we saw competitors here in Europe losing money with FTX, having FTT or Terra Luna ETPs blow up, go to zero. Can you imagine like telling a client that your product's worth zero now? So, and this happened not by chance. It was by actual structure that we have in risk management, saying, oh, we can't add this. So these tokens were never in any of our baskets, and so on and so forth. So I think the story in Brazil gets very interesting when you look at regulated products. You look at our volumes in the ETFs, and you compare it to the exchanges. In most months, we're only behind Binance in terms of volume. So that means that Brazilian investors, they're not going primarily through Coinbase or Mercado Bitcoin or Foxbit or some of the other very good exchanges that we have in Brazil. A lot of the market is going through ETFs. And why is that? Because my father, for instance, he would never open an account in Binance. He has shares in Hash11 ETFs because he is my father. But you get the sense, a regular investor, for us who are crypto savvy, managing private keys, understanding what's a good exchange, what's not. I think, look at FTX. Who would say that, oh, this is going to blow up from, you had all the signs of validation from, large VCs, US authorities, and so this looks like a big solid exchange. For retail, that's what's happening, right? So going into products that you can invest, and you have layers of regulation from depending on the country, the central bank or the securities authority, the stock exchange, and banks, the gatekeepers. These things, they make sense for a lot of investors, and for the majority of investors actually. And this is not to discard, not your keys, not your coins, is something that is true. And something I always like to say is that there's space for different types of investments. for different approaches to crypto. Should you have a ledger with Bitcoin on it and in a vault if something happens? Yeah, sure, that makes sense. If you're an average investor and you're trying to protect from, are you trying to protect from the government coming in and take your money? That's one thing. That's a very long tail scenario. Most investors are not concerned about that. They want exposure to 1-2% of the portfolio to an asset that they think will make sense, right? So there's space for both forms of exposure, and I think that's a cool story about the ETF market, the crypto ETF market in Brazil in general, is how it opens up the possibilities for people to access, right?
Well, I think that's really interesting point, because one of the kind of debates that's been had in the U.S. ad nauseum for the last 10 years now is over like the merits of is a Bitcoin ETF even a good idea, right? Where you have some people that are taking like, oh, it opens up new investment opportunities for a new market of people that wouldn't otherwise, kind of citing the gold example that you mentioned, and then you have kind of like the Bitcoin kind of maximalist like curmudgeon types who are like, this is stupid. If you want Bitcoin, just go buy Bitcoin and hold it yourself. Like, there's no reason to buy an ETF that tracks Bitcoin, where there's the custody risk, and there's the government might take it from you, and the asset manager is going to take a cut of the return, and and it's just like another financial product to kind of screw over the little guy or something like that, right? So what you're saying is the experience in Brazil really proves out that like having these ETFs really does sort of open up an entirely new market of investors in this asset class that would not invest otherwise, just for the reasons that you mentioned. Like, okay, I'm not technical enough, I don't trust myself enough to like hold this stuff on a ledger. I don't want to open an account on Binance, that's too complicated. I just want to kind of go through my traditional brokerage account that I use to manage my other investments. So you basically, it's kind of validating that these two worlds can coexist essentially, and they're not cannibalizing one another.
Yeah, no, they're complementary, and I think it's very short-sighted. I wouldn't even say short-sighted. It's ignorance sometimes. That sort of criticism, because it's failing to understand how markets work. And the impact that the impact in liquidity and in Bitcoin prices that having these products have. If you're a maxi and you want Bitcoin at the moon, the best thing you can root for is a US spot ETF, right? The best thing you can root for is for sovereign funds to be comfortable allocating into the asset class. And make no mistake, these sovereign funds, they're not going to have their in-house team managing keys directly, because this is one of gajillion investments that they have. And if you're either going through a service provider like Fireblocks or Copper or somebody like that, or you're going through an ETF manager, what you're doing is outsourcing a big part of risk management and tech that you don't feel that you have the time or the technical expertise to do. We have a full-blown team that lives and breathes and is paranoid around custody, risk management, right? Okay, so if you look at our custodians over time, they have changed, we have adapted, we have created procedures that didn't exist before, right? So if you look at, for instance, the way we manage the relationship with custodians, there are certain things that Coinbase institutional has now that were created for us, by us, with them, because we said we need this and this and that because we think this is the way to do it. And this is benefiting the whole ecosystem globally because we took the time to develop with them. So this is not you can't minimize the work involved in managing private keys and having the risk of ruin. And if you want to be off the grid and off the system, I think Balaji has an interesting, one of those podcasts, he said something like, you have like Chinese capital, woke capital, and crypto capital, right? So the Chinese capital, you're under, Chinese rule or whatever. Woke capital, it's, if you don't obey the rules, you'll be canceled and this and that, and you have to follow US guidelines and everything. And crypto capital is your self-sovereign, right? the way he positioned it there is interesting. Say, if you want to go to any extreme, the extremes are bad. If you become fragile. If you're way too much into world capital, U.S. capital, you're subject to everything that comes with U.S. Let's put a cancellation in the broader sense. But if you fall into the bad side of U.S. government, you don't want to be Arthur Hayes, or you don't want to be maybe what's happening with CZ right now. Like, if you get canceled by the U.S. government, that's the real cancellation that matters. It's not social media cancellation. That can really create problems for you globally, right? You don't want to be under Chinese capital too, and the risk of being under the PCC. And with crypto, if you go to the full self-sovereign route, what's left is being in a farm, growing your own livestock, growing your own crops, having solar panels, and being totally off the grid. That's very valid if you're a survivalist, if you're in Montana, if you're, say, like, that's a valid path. That's not the path for the majority of people, right? So I think, of course, these fights, I think, one way of separating these things, taking just a step back. When we look at crypto, let's call it not only crypto ETF issuers, but companies that are building bridges between TradFi and crypto, and of course, including Hashdex in that sense. The way I personally look at it is like, who's legit and who's not on the crypto side. Because on the finance side, that's easy, right? The financial markets themselves will do it. And by legit, I mean who's concerned about crypto for the long run, and who understands the potential of crypto, what it means, and why it should be protected, right? So we establish a big difference when I look at it, a crypto ETP issuer in Europe, or a Bitcoin futures ETP ETF issuer in the US. Say, is this guy the right side of the trenches, or is he just in there for the fast buck because he saw an angle and he moved fast and got a nice product out there? We are on the same side of that fight. It's protecting, and that goes from everything to pushing regulation in the right direction, to preventing, self-hosted wallets from being banned, and all of these things, they tie up together. And folks like us, like, we have real importance because we have transit with the regulator that sometimes a pure crypto, very anarchic type won't have. So as an ecosystem, we need to be together and understand that things will merge. I think that's what's missing in the thing. If going a little bit outside of Bitcoin and just looking at Ether or other blockchains that can be used for more things, the financial infrastructure of the world will be integrated into a single thing. This scheme of silos that we have today, it will disappear. You'll be able to trade 24/7, all asset classes, all exchanges, and these limitations that exist now, they'll be gone, right? And we need to make sure that we protect open blockchains, we protect code of speech, we protect people's ability, to not have their money seized, and this involves knowing how the game is played, and not just staying in a corner saying, okay, that, like, oh, those TradFi guys, let them, they're ruining Bitcoin. So I think, there's an interesting discussion there to be had. And, we know the folks. I mean, one book I read that had a great impact on me, and that we sort of have everybody that comes into Hashdex read it, was Crypto by Stephen Levy, that from the Wire article back in the day, which the book stops around 2001, right, too. So he's not talking about crypto assets. He's talking about cryptography. And the fight around cryptography, and the fight between the US government and the early cryptographers from the late 60s, early 70s, the NSA, up until the Internet Act, how this played out, how this is playing out again, and why cryptography is our last line of defense against authoritarian governments. And I think, if we can drive the discussion towards that, that's what I think matters the most. And I think that's what's starting to pick up in some places. This is obvious in Argentina. I lived in Argentina for several years. I have several friends there. All my Argentinian friends are crypto fiends, traders. They know what they're doing, and these are not like finance people or tech people. They're yoga teachers, athletes. There's nothing to do with finance, but everybody in Argentina is an FX trader. So when Bitcoin comes along, yes, we'll trade this. If you go to Argentina, a friend will tell you, bring me reais, bring me dollars, bring me anything you have, I'll buy them from you. It's been like that for years, right? So uh, in Brazil, we have a sense of that too, because we had color. We know what it means to have your savings account seized. In the US, after Silicon Valley Bank, I saw this discussion becoming a little bit stronger, saying, hey, oh, so money in the bank actually is like a loan to the bank, and this money might disappear. And yeah, it's like, that's how the system works. So having an asset that doesn't disappear and that you can store it yourself, and I think that's a very cool thing. And there's since we're talking about books, one book that's off the radar, but there's a Brazilian edition of it, and it's really cool. It's called The Mandibles, The Mandible Family, Familia Mandible in Portuguese. The Mandibles, from Lionel Shriver, that wrote We Need to Talk About Kevin, that movie, the movie about like the Psycho Kid. So The Mandibles talks about a scenario in which the U.S. goes bankrupt, and the rest of the world is kind of fine, and the U.S. explodes. And it's like follows like a family from Brooklyn, like kind of wealthy, and they're screwed because they don't know how to manage things. And there's a teenager kid, and he's the smartest one. But the U.S. dollar essentially went bankrupt, and you have a global currency called Banker. It's excruciating for us to read it because it sounds so real. You look at it and say, "Oh, this really could happen," right? So these things, they seem far-fetched until they happen. And if they're far-fetched for Switzerland, for sure they are. They might seem far-fetched for the UK or for the US. It doesn't mean that you won't have inflation. And inflation, it creeps towards you, and it comes, and after it starts, I think Luis Nunes from Forbes had a good phrase like maybe a year ago. He said, dealing with inflation is like playing soccer downhill. If the ball starts going down, and this is what U.S. economists sometimes miss. It's not like that. Saying things will come back, because it's not like that. This is Brazil had that number for decades. So I don't think to Balaji is bad. I don't think the hyperinflation is coming. I think it's a very clear publicity stunt. He even sort of said it as a publicity stunt. But inflation at real inflation at 20-30% a year. Sometimes you're seeing the rate at 6%, but actually on the street, what you're feeling is 20-30. That has an effect on the population that can't be, it's very hard to measure. And Europeans and Americans are not prepared for it because you don't have the memory of how to deal with that, right?
Yeah, I think it's a really, really great point, in the sense that, post SVB, I think SVB, probably Silicon Valley Bank, probably provided, more education about the nature of fractional reserve banking to the American public than any, economics, high school class or college class or anything ever could, right? Yeah, because it's like we've never, it's just you put money in the bank and it's just there, right? You don't think of it
Yeah.
as, oh, this might be just gone
Yeah.
someday.
Yeah.
And I think, and now even you're seeing all these discussions about, in the 1930s and the Great Depression, when Franklin Delano Roosevelt, they started seizing gold, issued an executive order to seize people's gold. And this is like kind of one of these obscure facts of history that like only, kind of like crypto libertarian, sort of diehard enthusiasts knew about before. And now it's becoming like pretty common. You're seeing a lot more people online talking about it, right?
Yeah.
So it's definitely it's all the stage is setting for like crypto to really have its moment here, which kind of leads me to my next question, which would be about with your products in Brazil. Just like a little bit more color on like who is actually buying these things, like who are the folks that are investing here, and are these folks are you do you think that you're seeing the demand that you're seeing because of this kind of inflation hedge notion, or is this maybe a function of the fact that maybe crypto is just kind of this new thing that, I mean, Brazilians are obviously very like early adopters. So like, hey, instead of buying an oil or a commodities ETF, like just kind of a traditional thing, let's try something new and a bit riskier. Or is it maybe kind of a factor of just capital markets in Brazil aren't as deep as in other markets, right? So there's just not, maybe relatively these crypto ETFs are doing quite well, but just in terms of like absolute numbers, there's just not as much demand for some of these other more traditional products. So maybe the crypto products, just look better on paper just because there's not as much demand for the other stuff. But we'd love to just kind of get a sense for like where's the demand coming from and what's the kind of the investment thesis behind it.
Yeah, that's interesting because it's very country specific and it has a lot to do with culture and actually the state of, let's say, investment or investor education and development, right? So it's changing, and we were benefited from a couple of big waves that we caught in terms of what was happening in Brazilian capital markets, financial markets in the past few years, right? So our investors today are maybe 70% retail or 65 and 35 institutional. Institutional is essentially family offices and hedge funds. And a lot of this essentially mostly through Hash11 because large investors, they tend to go through the large products because they need more liquidity. So, I can talk about some, stuff that was public, Verde, which is, probably the most famous traditional fund in Brazil, had for a long time a big position in Hash11. Luiz Stuhlberger, who's a legend, mentioned that in some interviews. So that was very work that we did on a very really picking each of these funds and sitting down with them and explaining the thesis. And if you go to the professionals, it's you can either have like the long-term thesis of there's space for this as an asset if central banks continue doing this, if you continue printing money. That's what Luiz Stuhlberger said in an interview. He said, you might wake up a day and have a global plano color, which would be, seizing assets and just resetting the debt. Let's put it like into Ray Dalio's terms, just have a big reset of the debt. And you do that, people suffer. So there's that side, but there's also like directional bets and trades on the short term or technical analysis. And I think hedge funds in Brazil, some hedge funds are very well versed in crypto already, to be able to look at price action and say, okay, this might be going this and that. So they can sort of read the signals already, I'd say, more than maybe hedge funds in other places. So there's that profile of investor, and there's retail in general, right? And then when you go to retail through the ETFs, I think there are a couple of things. First, really was the ingenuity that we had of doing IPOs of these. This was something that unheard of. I mean, I talk about it here in Europe or in the US. It's how we did an IPO of the ETF, and people are like, how? Like, how did you do that? But the greatest thing about the IPO is actually the bank talking to the client, saying, this is a product that exists, and take a look at it. What benefited us is that, first, we were in a wave of ETF knowledge growing in Brazil. When we launched Hash11, I think it was the 22nd ETF. Today, there's probably, I don't know, 70 and 80. There's a more than quadruple, triple or quadruple in a couple of years, because large banks in Brazil didn't pay attention to ETFs because you had the mutual funds, normal investment funds, charging 2 and 20 with big fees for the banks or issuers, or big rebates for the banks. And if you go back a few years before XP came along, essentially all the funds were coming from big banks, and you had very little independent asset managers gathering or collecting some funds directly from the public, right? XP comes along, and you go into an open platform model, bringing folks more into investment funds. And then the next stage is obviously ETFs. When you look at it and say, oh, ETFs are beating hedge funds and they're charging a lot less, and it's transparent and it has liquidity. So it's just a better product in 99% of the cases. That education that we pushed along, but at the same time, you started seeing Itaú really doubling down on their efforts, BTG coming with their first ETFs, XP coming with their first ETFs. So you started seeing a movement towards, hey, ETFs should also be here in the shelf of products. So these things, they fit in together. And if you go back into even prior to the ETFs, when we had just the funds, this journey of Brazilian investors going into out of fixed income into variable income and understanding investing in stocks and social media influencers talking about finance and diversification and asset classes, we went into that same pack. It's like, it wasn't like people have been investing in stocks for 50 years like it is in the US, and now I just bring in crypto. So what is this? I don't understand this. Like, they were having, investors in Brazil were having their education at the same time. They were talking about equities, gold, commodities, real estate funds, a lot, crypto. So there was a lot of openness to understanding the asset class. They say, oh, so this is another, how do you sum it up? Oh, it's very volatile, but it can go really up and really down. As, oh, okay, so this is crypto's thing for people. Because it's not like people really understand how real estate funds work, or how, hedge funds, you have very little transparency. You don't know what the investors are the asset manager is putting money into, right? So there's a certain leap of faith that the investor does and says, okay, I'll trust this asset manager. I think this asset class makes some sense. And we were a big part of that journey just by providing a lot of educational materials, explaining crypto, blah, 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 what crypto is, what it means. I think a good success that we had, and I think compared to the way people explain it here in Europe or in the US, I like our pitch better, because our pitch, it looks like Andreessen Horowitz pitch in terms of what open blockchains mean. This is a new layer of the internet. This is what it does. So you go beyond just central banks, and that's which you can get into a muddy discussion very fast when you go that. So we're explaining, saying, guys, this is tech investment. This is very volatile because you're marking to market, but think of this as a VC investment. It's a project with a team with it's not really software, it's protocol, it's a little bit different, but it's still a tech solution for a real world problem. But it's in their early phase, right? So if you invested in Google in 2002, and still, you're a VC, and then, okay, Google has an agreement with eBay. Oh, stock prices go up. Now, the agreement fell through. Oh, stock prices go down. You're not marking to market, because VC investments, they have a cycle of 6, 8, 10 years. In crypto, you have that. So if Algorand has a new agreement with the Australian government for doing this and that, oh, okay, prices go up. Oh, the agreement didn't go anywhere, prices go down, right? So you're seeing that in real time. But if you look at it as a tech investment for the long run, you can be more comfortable. And you have a level of upside that you normally won't have, because the tech companies that you can invest in the stock exchange, they're mature. I was discussing one of the good groups I have in WhatsApp. It's called Anti-Fragile. It's a group of some very interesting, intelligent folks in Brazil. And I said, we don't discuss VCs or VC investing enough in Brazil, or globally for that matter, because that's a very tight, closed group. You can't become an LP at Sequoia if you want to. It's not how it works. And that's where the best opportunities are in, the leading VCs. Like, if you understand what a long-term investment is. So I think that's a beautiful part of crypto, that democratizes that. You can be in the future of tech, of a segment of tech, and I think it goes beyond the segment. I think this is fundamental tech, so it affects everything. And I think that pitch stuck. People understood it. So all of these waves came together, and of course, us working there and understanding how these things connected, how investment advisors work, what's their mentality. So in that sense, our journey here in Europe or in the US, is it looks like Brazil 2018-19, because you talk to the investment advisors, where are they at? Oh, the client knows more about crypto than the investment advisor. So the investment advisor doesn't want to talk about crypto. That's not the case anymore in Brazil, because they were forced to learn over time, and they have the products and the clients coming to them. So they know they can get around. And usually you go to a big, agente autônomo from XP, they'll have some folks that really know crypto. And we have WhatsApp groups with these guys sending them news every day. And so they're in the loop. They know what's happening. Here, it's not there. And it's still like very retail driven. In Europe and the US, very retail driven, very independent, and sort of against what the investment advisor wants. So it's interesting how markets they have different cycles of maturation there.
Yeah, it's what my dad's actually a financial advisor, and I've been trying to explain Bitcoin to him for 7-8 years now, and he thinks it's interesting, but he doesn't understand. And he's got a lot of clients. He's starting to get a lot of clients that are kind of my age, and younger clients who are coming up, and they're asking, they're it's more of like degen types that are like, oh, I'm long in Bitcoin and I'm long in crypto, and I've traded GameStop back in the day, or whatever. And I think some of the issue with financial advisors in the US, at least, is like there's really no way that they can monetize this. It's hard for them to monetize this type of client unless on a commission basis. So if they're offering more of like a retainer fee, service model, that's fine. But generally, right, like the client is going to know more. If the client's coming to the financial advisor with some sort of knowledge about crypto, they probably know more about crypto anyways. And there's not really a way for the advisor to monetize it in the absence of a Bitcoin ETF. Which leads me to my, I'd like to kind of round this conversation out just by chatting a bit about your efforts both in the US and Europe, really trying to expand Hashdex's presence beyond just Brazil. And you've got a Bitcoin futures ETF in the US now. And I mean, the US is, I think everybody understands at this point, is maybe not the most favorable jurisdiction for this industry at the moment. But we do have this lawsuit, this Grayscale lawsuit, suing the SEC, trying to convert their GBTC product into an ETF. And I realize they're competitors of yours, but at the same time, if they are successful, this would presumably open up some of the floodgates for this backlog of Bitcoin ETF applications that we've seen over the last 10 years, really. So I'd love to kind of get your thoughts on some of those developments, and then also on what you're working on in Europe too.
Yeah, no, that's cool. So just a step back there. So I said when we started with the name in the US, and the first one is the US, and we always had a presence, an American presence. Caratori, actually, one of the co-founders, was based in Palo Alto. He's now based in New York. But he worked in Gavia with Arminio, then he went to Stanford, worked in tech companies, and just stayed. So we always had the thing with the US, right? And there was an interesting part of it, which is being a Brazilian company and having a global ambition is something that was always very close to our heart, and more than Brazilian, a Rio company. So although I'm kind of a Paulista. I was born in Belém, but my family is also from São Paulo. I had law school in São Paulo, but I lived in Rio for 15 years, and it's my city in the end. And I think of really having big business coming out of the city, and inspired by people like Jorge Paulo Lem and stuff like guys that come from Rio and can really take over the world. So we really had that, and I think it's we love to see the Brazilian startups that go down that route. After we raised our Series A, which was 2021, we raised 26.5 million at the time. The idea is these resources are of course scaling Brazil and then expanding our footprint in the US and other places, right? So we started the work of building the branches in other places with a few different strategies, right? In the US, if you're just going to go head to head against Grayscale, you're going to suffer. They're 20 times their size, right? So and they have a very strong local presence and stuff. So you're not going to hire 100 people and compete. That's not how it works. So you need to come up with a different angle. right? In Europe, it's a little bit different because the market's very fragmented. So you can have good angles in different countries or different pockets within countries. So you go to Switzerland, Zurich is different from Geneva, it's different from Lugano. The UK is one thing, France is another, and the market hasn't been taken. So you can do like a proper normal work of biz dev and sales and launch products. So this is, I'd say, our approach in Europe is more traditional in that sense. And in the US, it forcefully has to be more creative for us to have a shot of becoming something big. And then as we were looking into things, we started the discussion early, I don't know, maybe like a year and a half ago, around the 33 Bitcoin Act, Bitcoin Futures ETF, 33 Act Bitcoin Futures ETF, which didn't exist at the time, right? So we partnered up with Tidal and Teucrium, were two big ETF issuers. And we created that one, the Hashdex Bitcoin Futures ETF, which is the only one of its kind. And how does this tie up with the Grayscale thing? So there are four Bitcoin Futures ETFs in the US now. Three under the 40 Act, which is Beetle, the one from Valkyrie, and the one from Vanek, so very similar. And ours. Ours is the only 33 Act ETF. There are a couple of important distinctions, different tax treatment. Our ETF is not leveraged, so we buy just the futures. The others, they need to buy 25% of a Cayman sub, and then exposures through leverage. It's a very complicated structure. But the most important thing is that 40 Act trusts, ETFs, they can't hold anything but securities, right? As a general note. 33 Acts are the structures that you use, for instance, for commodity ETFs, wheat, gold, mining in general, mining and commodities in general, right? So the 40 Act ETFs, they can never be transformed into a Bitcoin ETF, Bitcoin spot ETF, because it just doesn't fit into the rule. The 33 Act Bitcoin futures ETF, theoretically, it can hold things that are commodities, and that's the closest that Bitcoin comes to. We know Bitcoin is not a security, right? So when we looked at that, I said, okay, so there's an angle here to be explored. Of course, this is the work that requires a lot of conversations with regulators, and that you need to go back and forth and timing, and there's a whole background discussion of things that are happening in DC, regulation around the exchanges, how these things play out. So the way we were thinking about it up until a few months ago was that this, there would only be space, and given how the SEC was denying all applications for new crypto Bitcoin ETFs in general, that approval would only come after federal legislation regulating exchanges, and then the argument around the underlying market not being regulated, that would disappear. You'll probably have the Killis limited brand bill being approved, authority being given to the CFTC to regulate crypto exchanges, and then after a few months, probably the SEC will be in a position to approve a spot ETF. So this was how we were thinking about it. The Grayscale lawsuit changes things a little bit. First, if you read market commentary before going in, it was largely against Grayscale. People thought, oh, this is not gonna work, right? But in that hearing, you saw the judges were very sympathetic to some of the arguments made, actively challenging the SEC's lawyers, saying, this argument that the market is different, how can you say the market is different if prices are together 99.5% of the time? And this is true. Even though, let's frame it differently. Even though they are different markets, the futures and the spot markets, the futures markets, they move in tandem with spot most of the time. So if you have manipulation in spot, that spills over into futures. even if you're not manipulating futures, right? So the SEC has been taking this like kind of semi-technical, convoluted approach of blocking based on this. I think a lot of it based on waiting for actual legislation to come out and having more clarity around crypto exchanges and so on and so forth. And there's a little bit of a turf war there with the CFTC, right? So when you see the judges having that position, like the odds change, you probably saw on Bloomberg a lot of the commentary coming, oh, now we think it's 70-30 in favor of Grayscale. And that's fine and dandy, but one thing being missed is that judges, they can be very sympathetic to the argument that the markets are essentially the same. You could have a victory for Grayscale, but that in the end ends up being a Pyrrhic victory, because it doesn't mean that a decision. It depends a lot on the wording of the decision, but it doesn't mean that a decision would be like SEC approve this. It would probably be Grayscale, you can refile. SEC, you cannot use that argument, or reassess your latest filings or your latest projections, right? And then the SEC probably couldn't say that the markets are different. They had like three or four other arguments that are not really, they're more like product specific related. They're not, they're not what's in discussion now with the lawsuit. And Grayscale was very smart to position the discussion as being spot versus futures. What they left out is that there has never been a conversion of an entity like the Grayscale Bitcoin Trust into an ETF. And this is a major thing.
Oh, really? I didn't realize that. That's never. There's no precedent for that happening.
There's no precedent. That kind of trust, so it's essentially a reporting company. It was an emerging growth company, so it's like a reporting company. Won't get into the technicalities, but if you look at the exchange they trade, OTCQX, that's where they trade like the pink sheets, right? So it's like GBTC looks a lot like just a company that has that buys Bitcoin, right? And it's not it's not an ETF, right? And because you don't have the redemptions can happen, and that's why you have the premium and the discount. And there's several other companies that have that structure. That if the SEC would allow GBTC to be converted directly into an ETF, you create a very strange precedent, because you have trusts like these that buy art or buy wine or have other stuff that could theoretically be converted into an ETF. So, the SEC can say, okay, I can't make that argument, but your corporate structure doesn't work. Come back, like do your homework, come back. And it doesn't mean that it's a dead end, but you can go into some very strange corporate discussions around, oh, maybe you need an ETF that's already running and that will merge into this one, or you're going to need approvals from. So it's not that clear cut that a decision that looks positive from Grayscale for Grayscale would result into fast conversion of GBTC. And what it does do is that it opens a window. You can get into a window in which you have the SEC prevented from blocking filings mentioning futures markets are different than spot, but they could assess other filings, right? So it's going to be. I think it's very hard to say what's going to happen. If you can have a precedent is when Beetle was launched, when the first ETFs, I know we were following that very closely, and Beetle, like they won, like it was a detail. They got the first one out, and it was 10 times almost the size of the second one, because they were, I think it was literally like 3 or 4 days before the first one, before the second one, and then the third one was a tenth of that. So it came down to the details of the filing of small things into the product. So we might have a race like that again. for the spot. Okay, so this is, and I think it's very healthy for the market that it opens up for new issuers, so that if GBTC is at some point indeed converted, it's not the sole large Bitcoin ETF. It's better for investors if you have a couple of large ones, like you have a couple of large S&P 500 ETFs, and then you go into price wars and what's the product that tracks. Is it the Vanguard product? Is it the BlackRock product? Which one tracks the index better? And you see what happens in equities products is like these large ETFs, they trade exactly on the index, like 1 bip of difference or 0 bips of difference. They have 0 fees. And so, but if you have one single gorilla with all the AUM, that becomes harder for the others to pick traction. So another issuer coming up and having the first mover advantage in spot, that presents a good challenge for when GBTC is actually converted, and that's where we like to be in. Like, but this is very there's a big component of work, but there's a big component of luck and everything that goes in there. There's no guarantee. So
it sounds like you have to position yourself for 4 to 5 different scenarios that all seem potentially like equally plausible, right, in terms of probability. But it almost seems like the best case scenario for Hashdex here, or for for I guess specifically for Hashdex, would be a ruling in the GBTC case that doesn't just give it's basically telling GBTC to like refile or telling Grayscale to refile. It's telling the SEC that they can't use this. There's too much manipulation in the spot market, so we have to deny this. But then why do you have a futures market, or why are you greenlighting futures ETFs if the underlying spot markets are manipulated? They can't use this argument anymore. And then it becomes kind of a race to, okay, everybody is going to submit their filings at the same time. Everyone's going to have these filings ready to go, submitting them, but you guys already have your 33 futures ETF that you might be able to potentially, have a head start in that sense, because you can convert that. And that might give you a head start over these filings from spread.
That's one thing that we have in that's very good, is that we have an ETF running. And, so of course, this is a process too. You're going to ask for changes in investment policy. And so these things are very not guaranteed. I think when we were launching that ETF, after we had the approval from the SEC and until it went live, it took an extra maybe 2 months, just in 2 or 3 months, 3 months. I think it was 3 months, I think there were 15 interactions. And formal interactions, I mean, requests coming and going, saying, change this, add that, clarify this, change that. So one thing is approving the product theoretically. The other thing is when it's ready to go live. You have the 19B4, which is the letter from the exchange. And so there's several things along the path. So it's going to be a race anyways, because it won't be, even if the decision is very, very positive for GBTC, it doesn't mean that the following day GBTC is ready to trade as an ETF. And in that window, the effect of the decision will be an effect that should be applied to the whole market for consistency. And actually, the arguments of Grayscale are under the APA, the Administrative Procedures Act, which says that you can't treat the same situation differently. If you have the same situation, you have to treat them in the same way. So if you have another filing for spot, they can't give a favorable treatment to Grayscale. They'll look at all the issuers as the same thing. So there's going to be a race anyways, and it's going to be fun. it's going to be fun. We're going to have some exciting times. Yeah. So but that's one of the big things for the US right now for us is that is how these things play out. And we've been careful enough in the past to put pressure in the markets that we thought merited at that time, where we would spend the money well. A lot of, we are a startup. We have the startup mentality. You really need to be mindful of cash burn and things like that. You can't just say, oh no, I'm going all in when you don't have an actual possibility of just breaking everything. You need product market fit, you need good angles, you need all those things. So we've timed the US, I think, quite right in the sense of not overextending ourselves. And hopefully this might be something that if we pull off, it's of course a game changer for us, and we'd be super happy with that, and in having that leadership position in the US as well, just like we have in Brazil, right?
Yeah, I think it's a great kind of concluding point, which is really that you're idealistic in your ambitions, but you're being pragmatic and like, look, like at the moment, there's really not much we can do aside from just kind of sit on the sidelines and be ready to pounce when the opportunity arises. There's no point in just sort of, people have been just like, submitting ETF proposals for years and just constantly getting rejected and rejected and rejected. There's no reason to expect that to change without some kind of, tectonic shift of sorts with which this GBTC lawsuit, could provide. I think, the market would like it to provide. But in the meantime, you're focusing on kind of expanding into other markets in Europe, kind of really doubling down in Brazil, your home market, and kind of waiting out, to see what other opportunities open up elsewhere. So, but with that, anyway, I'd love to, just kind of get your final thoughts here on, any kind of prognostication you have for just the Brazil kind of market generally over the rest of the year, particularly that we have. And did we really touch on kind of Brazil regulation or anything as of yet? But, just now that we've got a regulatory process in the works and a licensing regime in the works, there's a bit more, kind of stability in the market here. Would just love to get your kind of super quick take on what do you see happening in this market the rest of the year?
Yeah, I think Brazil's in a good state. There's a lot of sophistication in in crypto regulation in Brazil. I think people were able to develop their businesses. Of course, you had like steps back and forward. You saw the CVM, not order, but CVM statement around the fixed income assets. The tokens. These things, they create a little friction. But the ecosystem in general is healthy. I think what affects us more than actually just state regulation, which I think is like in a positive trend and will continue to probably go in the right path, is actually access to funding. Brazil is picking up as a key player in the VC world, being Latam, like the darling of VC funds for a couple of years, and Brazil especially around that. And everything that happened in the VC world in the past year or so, that really hurts the ability of a lot of Brazilian entrepreneurs to have easy access to capital. So you're going to need better projects from the start. And it's a bit of an unfair thing because access to VC money is not based on merit. There's a little game that you have to play and that need to know how to understand to navigate, that most investors don't have. I mean, we have this because that was background. That was Marcelo's background. That was Caratori's background, being California. So we knew the ins and outs of the large VC funds and how they think. So I think that's the that choke point on capital. That's a big thing. There's only so far you can go with friends and family money or your own money, and a lot of the reason that U.S. tech companies have taken the predominance they have is because you have the VC ecosystem working so well. So I think that's a big concern for this year, not only for new projects but things that already exist, and maybe folks are running out of runway because market fit is not there yet perfectly, but their product is cool. So I think that's where the VC ecosystem in Brazil should really gather up and try to protect the cool projects and make them scale, because sometimes they don't need a lot of money. They just need something more to keep the lights on for 6, 8, 10 months until things until the tides turn. So I'd say that's a concern. But in terms of projects, we're seeing some cool stuff coming. Brazil is very good at that. If I could end it with something, I'd say we need to be ambitious. We need to understand how capable we are of building global businesses, of having a real presence outside of Brazil. And it doesn't mean Argentina or Uruguay, which is like the trend of we're going to expand into Latam. No, Latam's great. I lived in Paraguay, Venezuela, Argentina. I love these countries. We have a product in Chile with BTG. This is good. But I'm talking about trying to make it in the big leagues. And because then it's different stakes, a different game, different volumes, different size, different everything. And I'm not saying that we were an inspiration at all. I'm just saying that we're following the footsteps of guys like Brex. So go outside of crypto and see Brex has taken over the US corporate credit card market. It's a couple of kids from Brazil. So it's like there's a way, there's a path forward. And if you go to the addressable market, that's 50 times the size of Brazil or 100 times the size of Brazil when you combine a couple of countries. Your access to funding changes, your revenues change. Of course, you need a level of sophistication that you don't have if you're just operating out of São Paulo or Rio, right? So I'd say sometimes we're expecting Brazil to change out of the will of the government or just like that. It's up to us entrepreneurs to really go after the big leagues and the big thing. And I know the 3G guys, they took a lot of heat for Americanas and stuff, but like you can never forget that these guys came out of Rio to buy Anheuser-Busch, to buy Heinz, to buy Burger King, like real references in global capitalism, and owned by Brazilian guys today. I think it's about time that we shut aside this complex and really go after the big things. Of course, then it's around. This is the stage that we're in now, which is like hedge your bets, be careful. A person in my team here probably costs 3-4 times what it costs in Brazil. So it's a very different game. But there is space. There is space, and I feel it when I talk to people here, how impressed they are of what's happening in Brazil, by what's happening in crypto in Brazil, how they appreciate the importance and how sophisticated our market is. I think that's the closing message for crypto entrepreneurs in Brazil is like, trust what we're doing because we're in the right path, and I just had to double down the efforts.
Awesome. Well, that's well said. Much better articulated than I could have done so myself. So thank you for that. So listen, Bruno, really great conversation. I learned a lot here. Would love to have you back on again sometime soon.
Yeah.
Maybe once we get some more updates on the ETF situation in the US, the GBTC situation, we'll have you back on. Really appreciate your time. Really great having you. Where can folks find you if they want to get in touch?
Twitter. I think Twitter is a good one. BRS Hashdex. So
awesome. Great. Well, thanks so much for joining us, Bruno. And thanks everyone for watching. And we'll see you next time.
All right. See ya. Thanks.